And we are back now with you here on the KFYR Plus News Desk. And gold has hit the unprecedented $5,000 mark over the weekend. And of course, that may mark a global uncertainty, driving investors towards a bit of a safety net. Today, we're joined by financial strategist Ron Glasgow of Glasgow Investment Solutions to explore what is fueling this surge and whether it's too late to maybe join that gold rush. Mr. Glasgow, welcome back to the news desk. Thank you for your time today. Nope, I'm not sure if I got you on mute or if you were on mute. Let's see, I've got audio here. Interesting. I'll tell you what, Mr. Glasgow, what I'll do is we'll send you another invite and we'll get you back on here in just about 2 minutes, if that's okay with you. I'm sure there must be some technically wrong. Oh, there you go. Yep, I've got you.
Yep, there you go.
Okay.
Apologies, some said got screwed up. My apologies.
No, it's no problem. So, Ron, what in your view is the strongest force pushing gold over that $5,000 level right now?
Yeah, I think the strongest force is the fact that there's so many forces out there. You know, there are a lot of headwinds as we enter the new year. So we have the incursion in Venezuela. We have tension with Iran. We have the talk about Greenland. You have a selling America. You have a lot of other countries starting to sell off our treasuries. You still have the Ukraine going on. I mean, the list is almost endless. And when you look at all of those in aggregate, it just creates a lot of uncertainty. And people have historically gone to gold during times of uncertainty.
Do you see this rally as fundamentally driven or mostly a reaction to the fear and uncertainty? I guess you kind of answered that question, but kind of drill down on, is it everything combined, like you said?
Yeah, I don't think there's any fundamentals that say something should double in a year, which is what gold almost did. You know, we were from 2000 to early 24, just around there, to right now we're over 5,110 a few minutes ago. So nothing, no fundamentals drive that kind of growth in anything. So I
Okay.
do think it's a lot of fear. And people, ask me all the time, should I allocate to gold? And I'm like, look, if you're trying to trade in and out of it, that's on you. I am not a trader. My crystal ball was broken the day I got it. But if you're looking to make a long-term allocation, the old adage goes, invest when you have the capital available. For those people that have done that in the past are very, very happy right now.
Do you feel that retail investors are too late to the rally, or there's still room for new entrants?
Sure. Again, are you looking for this to be a long-term part of your portfolio? If so, I think it's a good time to enter. I mean, if you wait to see if prices are going to drop, they may go up further. I know a lot of the big wirehouses out there have increased their estimate. Goldman Sachs most notably. So again, if you're looking to trade in and out or make a quick buck or try to play this market, that's not my ballywick. I mean, best of luck to you. But if you're looking to make that allocation of 5 or 10%, or even more if you're safety conscious, now might be a good time. And I would say also maybe you look to diversify your gold. Silver's kind of up there. There's other precious metals as well. But again, diversification is the key to everything.
How should an average investor evaluate whether gold fits into their portfolio at these prices?
Yeah, I mean, I think it depends on how much beans you have. I mean, if you're like I was when I was, just out of the Marine Corps and I was, 24 years old, starting to get out with the Roth IRA, you're probably not going to allocate to gold at that point, right? You're always going to pick your mutual fund and hopefully diversify and move. But once you get to real beans and you're staying there, you're kind of in the middle of your earnings or certainly looking towards retirement. That's when you really want to start to protect things. So would I buy gold now, expecting a huge run up in the future? Probably not. We're at all time highs. But if I was looking to have a hedge in my portfolio against stocks and bonds, I certainly think it would be a decent time.
Okay. What's the most common mistake investors will make when buying gold during periods of uncertainty like this?
Yeah, I think the knee jerk reaction, there's it's not just gold, but there's report after report or study after study that shows that investors by and large do the wrong things at the wrong time. I always say this is the only business in the world where no one likes to buy when it's on sale. So when gold was down there, kind of dwindling at 2,000, it's we're looking at Bitcoin, we're looking at the S&Ps on this crazy tear for the last 20 years. And that's why you diversify, right? That's why you always have some diversification. Because at the end of the day, we don't know what's going to go up or down this year. You just want to spread it out.
Okay. If global tensions were to ease, Ron, in your opinion, how quickly could gold retrace from these highs?
Yeah, I just looked up the charts. We've had one double-digit gold drop. I think it was 2013, maybe. Don't quote me on that. But these things could go down. And I think if there is, if some of these things sort of come back and we get to a more normal state of affairs, whatever that means, I think maybe you'll see some of this recede, but it's not for the long term. I mean, I don't think we're going back to 2000 an ounce anytime soon. So I think, you make that allocation based off looking forward. If you want to put gold in today or you're going to want it there in 10 years, then you're probably good to have gold in that portfolio. And if it goes down in the interim, who cares? You were holding it for the long term anyway.
What risks do people underestimate when they rush into gold?
Yeah, I think you sometimes throw the baby out with the bathwater. So, what a lot of people are going to do is they're going to look and say, boy, we have all this money in cash and, the interest rates are going down. We have another Fed decision this week. It's expected it'll stay neutral, but, you're not making as much on your money markets. So let's put all our money in gold. Okay, well, that's when you make a fallacy. There's rarely an all or nothing in life, and certainly when it comes to investing.
Do you feel that gold has a ceiling, or are we entering a new normal for precious metal valuations?
Yeah, there's always a ceiling, but what that is, and the ceilings get broken over time. I do feel like we're entering kind of a new normal. I think we're going to be at this range again. I don't see us going down to $2,000 an ounce in gold. I think once it steps up, it's kind of here. Now, will it retrace and go back in the 4,000s, maybe in the threes? Certainly possible, but I don't think we're going to go down to where $2,000 an ounce is the norm.
How does gold compare to other safe haven assets right now?
Yeah, well, if you look at the charts in the near term, it's blown everything away. Everything you've heard about for the last, 5, 10 years was Bitcoin, right? Bitcoin and crypto.
Yeah.
So it's even beating the Bitcoin and crypto stuff right now. So that's why, don't get too enamored with gold. I think it's a great asset. I have some myself. I have some silver. I like to hold that personally, by the way. But I wouldn't just say, okay, let's sell all of my crypto and put that in. Let's sell the S&P 500. Let's sell my mutual funds or bonds. Again, diversification is the key. And there's an old chart that most of the mutual fund shops used to put out where it shows the top performing sector year by year. And man, normally you get a sector that's up there 1, 2, 3 years and then drops to the bottom and then it rotates. So look, if I had that crystal ball, I'd be on a beach somewhere. I don't. So that's why you diversify and do as best you can.
Give me your thoughts on silver since you brought it up.
Yeah, I like silver is interesting. So it's kind of at an all-time high too. If you do want to hold the silver yourself, it does take up some space. It takes up a lot of weight. But I don't think you go wrong with silver either. It's always sort of been the ugly little stepbrother to gold because gold is so shiny. It's the one that everybody concentrates on. We hit all-time highs in silver. And it's value is value.
What should first-time buyers of gold watch out for to avoid, whether it be a scam or overpriced products?
Yeah, this is always hard when you're buying gold. This drives me nuts too. You want to definitely go through a reputable source. So the cheapest is not always the best. So make sure you're going through a very reputable source. If you have someone local, that's great. If not, there's some major firms out there where you could buy it. But it's the spot price compared to what you're paying for it. And that's how these firms make money, right? I mean, they don't have the big fancy websites that give you, minute by minute gold prices for free. So you really want to look at that spot price compared to what you're buying it at and try to get that as narrow as possible.
And Ron, when we look back 5 years from now, what do you think investors will say was the biggest lesson from this gold surge, and what will they wish they had done differently?
Yeah, I think when you look back 5 years from now, something else is going to be in the sunshine. That's almost always the case, and people are going to say, "Wow, I probably put too much in gold. If you start, threw a bunch in right now, or man, I wish I would have had more." Depending on where that goes, I think as you look back, you just want to make sure you have that diversification. I know that's boring. I mean, I know when you hear financial guys like me, we say diversification. It's a lot like saying eat your vegetables, but it really is exactly what you need to do. And then your portfolio is going to be okay. You're not going to blow yourself up and some by going all in on one asset class or another.
Give me your educated guess on what gold pricing will be in 5 years from now.
Oh man, 5 years. I think we're kind of. I can't even guess. I think if you say 5,000 is the floor to do a normal rate of return, whatever that is over the 5 years, yeah, I think somewhere between 4 on the low and 6 on the high. But I've been wrong before.
Okay, Ron Glasgow, Glasgow Investment Solutions. Thank you so much for your time, Ron. I sure appreciate it.
Yep, thank you. Thanks for everything.
You got it. All right, 15 past the hour. We'll take a break. We'll come right back here with a look at your local news headlines next.